Welcome in, everybody. We're diving into the CNBC Delivering Alpha Investor Summit today. We've got excerpts from CNBC's live updates,
Yes.
which is pretty cool. It's like having a backstage pass to what the giants of finance are really thinking, you know?
Oh, yeah, absolutely. It's a glimpse into how these major players are reacting to the market's record highs. And, of course, what they see coming down the road.
Exactly. So let's just jump right in. The market is on fire right now. Dow, S&P 500, even the NASDAQ, they're all hitting record highs. And there's this buzz that Trump being reelected is fueling the optimism. But even with all this excitement, some investors are like, hold on a second.
Yeah, there's this interesting dynamic going on. You've got the momentum of a strong economy and policies that are favorable. But then you have seasoned investors like Nelson Peltz. He's out there saying, trees don't grow to the sky. And then you have David Einhorn. He didn't hold back at all. He called this the most expensive market he's seen.
Yeah.
And his career goes all the way back to 1996. So,
Wow, that's a pretty serious warning from Einhorn. It makes you think, is this bull market going to last? Or is a correction coming? What do you think? I mean, as someone who really studies these trends, should we be worried?
well, I think it's a time to be cautiously optimistic. The economic signs are positive right now, but history tells us that markets go in cycles. So what's really important for you as an investor is to really understand what's driving this growth. Are you comfortable with the risk? Because this wave could come crashing down. Are you okay with that? Or do you want to be a little more conservative?
Yeah, that's such a good point. It's easy to get caught up in all the excitement, but you got to make smart choices for your own situations, right?
Right.
And speaking of things that could really affect our investments, David Einhorn, he had some strong opinions about inflation. He's predicting it's going to go back up to that 3.5, 4.5% range. He's pointed to Trump's tax cuts, the strong economy, wages going up, even immigration policies as factors.
Yeah. Einhorn's prediction carries weight, He's not just some random commentator. He founded Greenlight Capital, a very successful hedge fund. So when someone like him starts talking about inflation, people listen.
Definitely, and he's not the only one. Ann Walsh, the CIO at Guggenheim, which is just a fancy way of saying the person in charge of all their investments. She agrees that inflation is a growing concern. She's predicting the bond market's going to be volatile as investors try to deal with inflation and the growing deficit.
That's a crucial insight for anyone who has money in bonds. Basically, when inflation goes up, the buying power of your fixed income investments goes down. So it makes sense that bond investors get a little nervous when they see inflation rising.
Okay, so we've got a market that might be overheating worries about inflation. What else are these financial bigwigs thinking about?
Well, let's shift gears a little bit. From the big economic picture to something more specific, taxes. During his campaign, Trump promised to get SALT back. He's talking about the cap on state and local tax deductions. It's been a big issue since the tax reform in 2017, especially for people living in states with high taxes.
Yeah, the SALT deduction has definitely been a hot topic, especially for people in states with high property taxes. So is SALT coming back?
Well, CNBC's Robert Frank, he covers wealth and taxes, and he thinks a full repeal is very unlikely because of the cost. He thinks what's more likely is an increase tied to inflation. So some relief, but not a complete reversal.
So we've got potential tax changes, inflation worries. The market is at an all-time high. Sounds like a lot of uncertainty.
Definitely. And it's times like these when you see both opportunities and challenges. Like what's happening over at Disney, fresh off that proxy battle with Nelson Peltz.
Oh, yeah. Peltz, he's known for shaking things up.
Yeah.
Even though he didn't get a board seat, he made an impact. And now he's making predictions about Bob Iger, the CEO of Disney.
Yeah, he's saying Iger will be stepping down before the end of 2025. Which is a lot sooner than Disney's official timeline suggests. Adds a little bit of mystery to the situation, especially since Iger's been there so long.
Like a real-life corporate drama unfolding, right?
Yeah.
And to make things even more interesting, Peltz is actually positive about Disney's new chairman, James Gorman. He seems to think Gorman will be key in finding someone to replace Iger.
It's fascinating to watch these power dynamics play out,
Yeah.
Even though Peltz lost the battle, he's still a major player influencing what happens next at Disney.
From these big trends, let's zoom in on someone trying to disrupt an entire industry. Ben Affleck.
Not as Batman this time.
Exactly. He was at the summit, but not as an actor, as the CEO of Artists Equity, a company that wants to shake up Hollywood.
What's interesting is Affleck isn't just talking about change, he's putting it into action. He wants a system where everyone involved in a film, from actors to crew, has more ownership and benefits more from the success.
That's a pretty big change from how Hollywood usually works. How's he actually trying to do that?
One way is something he calls escalating tranches of bonus money. It lets him manage the initial investment with the cast and crew, but guarantees that if the film is a hit at the box office, everyone gets a much bigger piece of the pie. It's a fascinating attempt to change who has power and how profits are shared in Hollywood.
While Affleck focuses on human creativity, the summit also highlighted the growing power of AI.
Yeah. AI was a big topic. They even showed AI-generated versions of CNBC anchors Andrew Ross Sorkin and David Faber. It definitely started some conversations.
It is exciting, but also a little unsettling to see how fast AI is developing. If we can't tell the difference between a real news anchor and an AI version, what does that mean for the future of information and truth?
It's a valid concern and one that investors are thinking about too. How do you invest when the lines between reality and simulation are getting blurry?
It's like we're living in a science fiction movie. But before we go down that rabbit hole, let's talk practicalities. If AI is such a game changer, what should investors be taking away from all this?
Well, remember Joe Taylor from the Ontario Teachers Pension Plan? He had some good insights. He talked about their two-pronged approach to AI investing. They're putting money into established companies that are already using AI to make profits, the big tech companies. And they're also supporting new AI businesses that could really shake things up.
So it's a bit like they're hedging their bets, backing the sure things and taking calculated risks on the potential disruptors.
Exactly. And that makes sense in a field that's changing so rapidly.
And speaking of global investment, Joe Taylor also expressed some concerns about potential tax changes under the new Trump administration.
Right. We talked about the SALT deduction earlier, but what specifically is Taylor worried about?
Yeah, what's on his mind?
He stressed the importance of stable and predictable taxes to attract long-term investment, especially from foreign investors like the Ontario Teachers Pension Plan. He's concerned that sudden or frequent changes in taxes could make the U.S. a less appealing place to invest, which could hurt economic growth.
It's a good reminder that decisions made in Washington have a ripple effect around the world.
Exactly. We live in a globalized world, and investment decisions are influenced by a lot of things. Domestic policies, global trends, everything's connected.
It's a lot to consider, and honestly, we've only scratched the surface. This Delivering Alpha Investor Summit is giving us a lot to think about.
It really is. And as we move on to the next part of our deep dive, we'll keep breaking down these complex issues and explore what they might mean for you as an investor in this ever-changing world.
Buckle up, everyone. It's going to be a wild ride.
It always is. So before the break, we were talking about Joe Taylor and how he's a little cautious about potential tax changes with the new Trump administration. It really shows how what happens in politics can directly impact finance, especially in today's global economy.
Yeah, you're absolutely right. Decisions in Washington can send shockwaves through markets around the world. It's like this balancing act. One wrong move can mess everything up. So we've talked about inflation worries, potential tax changes like with the SALT deduction, even Ben Affleck shaking things up in Hollywood. But what about the big picture for the U.S. economy? Is all this post-election excitement warranted? Or are there some warning signs we should be looking out for?
That's the million-dollar question, isn't it? We did hear some interesting thoughts on this at the summit. Remember Olalu Aganga, the chief investment officer at Mercer? She made a point that while a second term usually means stability, Trump being reelected actually brings a new level of uncertainty in terms of policy. And this can make investors hesitant because they just don't know what changes might be coming.
So it's not just about who's in charge, but what they're likely to do and how that's going to impact different parts of the economy that make sense.
Exactly. And Naganga specifically mentioned concerns about possible changes to tax laws and maybe a shift away from renewable energy. These are big issues that could have long-term consequences for investors.
Right, and we can't forget Ann Walsh from Guggenheim. We talked about her earlier. She's especially worried about the bond market. She's predicting a bumpy road ahead as investors try to figure out what the tax cuts, the growing deficit, and the Federal Reserve's moves to control inflation all mean.
Walsh's perspective is valuable because she's looking at the whole picture. She's considering how all these different economic forces work together and how they might affect different investments. It's like trying to solve a puzzle where each piece represents a different economic factor, and you have to figure out how they all fit together.
It sounds pretty challenging with so many moving parts.
It definitely is. And speaking of complex puzzles, let's go back to AI for a minute. We talked about Affleck's idea for a fairer Hollywood model, but he also made an interesting point about the limits of AI.
Yeah, he said that while AI can imitate and copy, it can't really create. And then we saw those amazingly realistic AI-generated versions of the CNBC anchors. It's incredible how fast this technology is advancing. It's almost like our brains can't keep up.
It really is a turning point in history. We're seeing technologies emerge that are challenging our understanding of creativity, intelligence, what it means to be human, and it's happening so fast.
It's like science fiction is becoming reality right before our eyes. But let's bring it back to investing if AI is such a game changer. What are the key takeaways for those of us trying to make sense of it all?
Well, remember Joe Taylor from the Ontario Teachers Pension Plan. He offered some valuable insights. He talked about their two-pronged approach to AI investing. They're backing established companies that are already using AI to make money, like those big tech names we all know. And they're also supporting new AI businesses, the ones that could really disrupt things.
So it's a bit like surfing. You have to be skilled and experienced to ride the big waves. But you also have to be willing to wipe out sometimes.
That's a great analogy you have, to be able to adapt to changing conditions and be okay with taking on some risk.
But AI isn't the only thing shaping the investment landscape. We also have to think about geopolitical tensions, climate change, social unrest, and a bunch of other factors that can create both opportunities and risks.
Absolutely. The world is complex and interconnected, and you can't predict the future with any certainty, but that's what makes investing so challenging and exciting, isn't it?
It definitely keeps things interesting. It's like playing a strategy game where you're always trying to anticipate the next move and position yourself for success. Sometimes you just have to trust your gut and take a leap of faith.
Well said. As we wrap up this part of our deep dive, I think it's important to remember that investing is a personal journey. There's no one-size-fits-all approach. It's about understanding your own risk tolerance, your financial goals, and what's important to you.
You're right. It's not just about chasing returns. It's about aligning your investments with what you believe in and what you want to achieve.
Exactly. And as we move on to the final part of our deep dive, let's keep those principles in mind. We'll explore some key takeaways from the summit and discuss what they might mean for you, our listener. As you navigate the ever-changing world of finance, stay tuned.
Welcome back to the Deep Dive, everyone. We've been exploring this CNBC Delivering Alpha Investor Summit, and man, it's been a whirlwind of information. Record market highs, inflation worries, Ben Affleck's plan for a fairer Hollywood, the rise of AI. It feels like we've covered a whole year's worth of financial news in just a few minutes.
Yeah, it really highlights how dynamic finance and the global economy are. There's always something new to learn, some new trend to analyze, a new challenge to consider.
So as we wrap up our deep dive into the summit, what are the big takeaways for our listeners? What are the major trends that stood out? And what should investors be watching for in these uncertain times?
Well, one big theme that really resonated with me is the importance of adaptability. You know, we're living in a world where technology is changing so fast. The geopolitical landscape is shifting constantly. Social norms are evolving. It's like the old rules of investing just don't apply anymore. We need to be agile, flexible, and open to new ideas.
That makes sense.
Yeah.
It does feel like the ground is constantly shifting beneath our feet. But how do we as investors actually adapt to this rapidly changing world? Where do we even start?
A good place to start is diversification. Don't put all your eggs in one basket, you know. Spread your investments across different asset classes, geographies, and sectors. That way, if one area of your portfolio doesn't do well, you're not totally wiped out.
Diversification is key, but isn't there a risk of over-diversifying? How can our listener find that sweet spot?
That's a really good question. Over-diversifying can actually hurt your returns and make it harder to keep track of your investments. The key is to find a balance that works for your risk tolerance and financial goals. You might want to think about working with a financial advisor who can help you build a diversified portfolio that's tailored to your needs.
So diversification is important, but it's not a one-time thing. You need to be thoughtful and intentional about how you diversify.
Exactly. Another big takeaway from the summit is the importance of thinking long-term. Don't get caught up in the day-to-day ups and downs of the market. Instead, focus on building a strong foundation for your financial future. Invest in companies and industries you believe in, and be patient. Rome wasn't built in a day, and neither is a successful investment portfolio.
So it sounds like you're saying to play the long game, not the short game. And that's good advice for life in general, wouldn't you say?
Absolutely. Patience and a long-term perspective are so important, especially in today's world. And as we talked about earlier, it's crucial to do your research, understand your own risk tolerance, and make sure your investments align with your values. Investing shouldn't feel like gambling. It should be a thoughtful and informed process.
I'm writing this down. Diversification, long-term thinking, informed decision-making. What other gems of wisdom can we take away from this summit?
Well, in this age of information overload, it's more important than ever to stay informed. Keep up with the global economy, follow market trends, pay attention to what the experts are saying, but don't just blindly follow the crowd. Think critically, question assumptions, and develop your own informed perspective.
So be a smart consumer of information. Don't just absorb it. Actively analyze it, come to your own conclusions.
Exactly. And don't be afraid to look for more information or ask questions. Talk to financial professionals, other investors, have thoughtful conversations about the market.
This deep dive has been incredibly insightful. We've learned about the challenges and opportunities facing investors today. We've heard from some of the brightest minds in finance, and we've gotten a better understanding of what's shaping the global economy.
It's been great sharing this journey with you and our listeners. Remember, investing is a lifelong learning process. Stay curious, stay engaged, and never stop exploring new ideas.
And on that note, we'll leave you with a final thought to ponder. Ben Affleck's vision for a fairer Hollywood, a model where everyone involved in a film benefits more from its success. That's a really interesting concept. Could this apply to other industries where creative talent is key? How would that change the balance of power and who profits? It's something to think about as we navigate the future of work and the role of technology in our lives.
That's a great question to leave our listeners with. It encourages us to think outside the box and imagine new possibilities.
Thanks for joining us on this deep dive. Until next time, keep exploring, keep learning, and keep investing in your future.